What's up, degenerates, dirtbags, perma-bears, and now newly flipped bulls, maybe? We'll see, but this is Trades and Gains. I'm your host, Max Pitts, and this is where you get your daily decode of Wall Street's wild ride. It's Tuesday, April 29th, and markets just logged another green day. The Dow posted its longest win streak of the year, while the S&P and Nasdaq clawed back early losses. Fueled by tariff relief, fresh earnings, and eye-popping options flow, let's dig into what really moved the markets today, why it matters, and what smart money is betting on next. So to kick things off, our snapshot, the S&P 500 saw a 0.58% gain on the day. The Nasdaq saw a 0.55% gain, and the Dow Jones even got in on the party with a 0.75% gain, or 300 points. It's its longest streak of 2025 so far. Today's action was all about tariff relief and earnings digestion. Early red turned to green after the White House offered automakers some much needed breathing room. Now, Trump's auto tariff relief, and this is equaling risk on rebound. Trump signed an executive order shielding automakers from double tariffs on imports. Result, positive reaction across GM, Ford, and Tesla, even as Ford guidance remains murky. We also had consumer confidence absolutely tanking. The April read was 86 versus 92.9 last month, the lowest since COVID era lows. But markets shrugged it off, focusing on earnings instead. And the labor market is weakening. The job openings dropped to 7.19 million, which is the lowest since 2020. And construction job openings fell 38,000, a leading signal for slower economic growth. Now, let's head over to Investor Central Club to look at our options flow data for today. And if you want this same flow and this same data for only $25, make sure you use that code 125 so you can get Investor Central Club for less than $1 a day. That's less than what you spend on coffee, my friend. But let's go ahead and kick this party off. So today we had SPY leading the pack with 66.67 million in total flow with a heavy put bias. We had $49.82 million going into puts. We had IWM with 24.58 million, with 90% of that being in puts. NVDA saw 17.99 million. Again, it's a coin toss. It's like almost 50-50. Heavy call buys though. We're coming in with 8.46 million against 9.53 million in puts. Microsoft saw 11.76 million, which was all call buying. That's rare. And then we saw SOFI with 5.84 million, split down the middle pretty much, with 2.25 million in calls versus 3.59 million in puts. Now, let's go ahead and look at some of our unusual activity from today, as we've done our big money breakdowns already. So some of our unusuals up here, as we can see, we had Snap come through with a big money buy. And that was with 128,000 call contracts at the $11 strike expiring May 16th. That person probably just got piped and smoked down. SOFI, we saw a massive $47,000 volume pull on the $12 puts expiring in June on the 20th. VRTX, we also saw 12.5 million dropped on those $500 calls, $1,000 in volume on that. Microsoft, we saw a cluster of sweeps on 385 May calls, and NVIDIA, we saw heavy May 170 call blocks with elevated IV. The read on this is large-scale call buying in Microsoft, NVIDIA, and Snap shows bullish bets on tech continuation. However, with Snap, as we have learned, they missed earnings by about 366%. So yeah, maybe not so much with Snapchat. But then again, it's Snapchat, so I don't know what we were all really expecting, right? But puts in SPY and IWM suggest hedging or skepticism under the surface. Again, if earnings end up being a flop for a lot of these companies, the analysts are expecting a 3 to 5% market swing in either direction, depending on beats and losses. So be on the lookout for that as well. Now, some stock highlights. Let's head back over to our recap side of things and talk about some highlights in the market today. We had Amazon. They denied reports of showing tariff costs on product pages. WH called it a hostile move, and the stock dipped, then obviously recovered. Spotify missed on MAUs and guidance, and shares were down 8% on the intraday. GM beat on earnings but pulled guidance pending tariff adjustments. Earnings call pushed to Thursday. And Royal Caribbean Cruise Line raised full year EPS guidance. The travel sector shocker there. Now, some macro and commodities. We saw gold with a down 0.56%, down to 33.29 as a safe haven appetite starts to fade away. Oil, we had Brent at $63.19. WTI was sub 61, with demand outlook looking weak for that matter. For home prices, up 0.3% month over month in February, but the pace is cooling off. Again, those interest rates are pricing a lot of people out. Now, earnings, we had Starbucks. They reported. Maybe I'll do a report on that later. Tomorrow, we have Microsoft, Meta, and Boeing. On Thursday, we have Apple, Amazon, and General Motors. And for data drops, tomorrow, we're going to see Q1 GDP. The Atlanta Fed sees negative 2.7%. And Thursday, we get PCE inflation. Now, the overall outlook here is tech is still leading, but dark pool and options data suggests hedging under the surface. Watch for follow through or rejection on SPX at 55.70, and for QQQ, we're still looking at that 475 level. Rotation into value and defensives are starting to pick up, especially with XLP and XLV. Strategy tip here is use earnings volatility to your advantage. Straddle or strangle setups in Microsoft or Meta. Those can kind of look juicy. Now, if you're trading this week, buckle up. Earnings plus macros equals the volatility playground from hell. Subscribe, hit that bell, and stay tuned with Trades and Gains for the sharpest edge in the game. Drop your take. Will earnings save this rally? And who do you think is going to beat tomorrow? Meta or Microsoft? Leave it down in the comments below, and maybe we'll buy contracts on whichever one gets the most traction. Stay smart, stay dangerous, and I will see you guys in the next one. Love you all. Mwah.